Tomorrow we have CPI. The Bank of Japan is making big moves, gold and Bitcoin are soaring, and stocks are coming down. And don't forget about the bond market. We've got a lot to talk about here today, so stick around to the very end, leave a thumbs up button on this video, and let's jump in. Alright guys, welcome back to the channel. Today we're going to start out by taking a quick look at everything that's going on in markets from a big picture standpoint. We've got stocks coming down here pretty hard this morning. Well, nowadays it'd be pretty hard. It's just been going straight up for a while, but it seems like stocks are giving back some of their gains. The Dow is coming down. We got the NASDAQ and the S&P 500 all showing a little bit of weakness here, and that's coming at the same time we're seeing a little bit of strength in the dollar. Euro's tumbling on that, so same with the pound against the US dollar. And despite this dollar strength, we see gold doing just fine. What that might suggest to you, and sometimes is something worth mentioning, when gold and the dollar are both up, sometimes that can suggest that we may be seeing a bit of risk-off sentiment in the markets. People a little concerned, so they go into cash, but they also go into gold. It doesn't happen that often, but when it does, it's very worth paying attention to. It could, in my opinion, be suggesting that we have more room to pull back on some of the stock indices. So I figured we'd start with gold here today, which has continued its massive rally here. I did a whole monologue here on the live stream here today, basically talking about how I think a lot of traders are going to get themselves into trouble because a lot of people who are watching this video might feel this way right now. If you're not in this move, you're probably feeling a little bit of good old-fashioned FOMO, and if you are, then guess what? You are human, and it's very normal and okay. So I just want to start out by saying if you feel FOMO recently watching gold just go up every day, don't worry. It happens to all of us. No one catches all of the moves, and let me offer you something to think about. What a lot of traders will do right now is one of two things. They'll either buy gold chasing it here, thinking that it couldn't possibly go down. It just goes up every day. It's going to keep going up, right? That can get you into some trouble because, of course, when it does even have just a normal pullback, those people who often buy on margin can get themselves into a lot of trouble. So be very careful with trying to chase. But more importantly, we see retail traders shorting this move even more aggressively. I'll show you that data in just a second. But what I want to point out here is that a lot of traders will now say this thing is overdone. It can't possibly keep going. And then if it does, they lose their entire account. This is a story that plays in, day out. And when you see these big moves, it happens even more. So be very careful watching gold. And just to back up my point, this is retail positioning on the Edge Finder. We can see that gold has a very big preference from retail traders trying to short it. So retail traders are really selling gold thinking that it can't go any higher, and they've been doing so this whole rally. So as you can imagine, they're not on the right side of that trade. So where does that leave me personally with gold? Well, I'm still in my position. Currently, we are floating. Let's see what the trade is looking like. We're up about 6,200 bucks at the time of recording this video. My stop loss is trailed, and let me speak candidly. If you didn't catch the gold move, the best thing in my opinion is to do nothing. You didn't catch the move, and that's okay. Sometimes you miss it. So we had this big push here, and I've just been trailing my stop loss. But again, if I didn't have a position, I'm not touching this, right? It's just gone straight up. So I do think it's due for a pullback, but that pullback could come in a week or two, right? We could continue to move in the meantime. So for me, the way I manage a trade like this is I drop down to the 4-hour chart and I isolate areas where we've seen pause and then resurgence of the rally. And I've done this several times here where these little moments have been opportunities for me to trail a stop. And I've done it several times here. I will stay in my gold trade unless it breaks through support and corrects. Now, if that happens, you may actually even see a short-term downward trend kind of envelop. But for me right now, the only thing to do is to simply wait and let profits ride. And Bitcoin continues its massive rally. I think here what we're starting to see, especially on a day where stocks are down and Bitcoin is up, is perhaps there's a little bit of a flock into Bitcoin as a sound money concept. And you guys know me, if you've watched my channel for a while, I'm not the biggest crypto bull by any means, but we're seeing this arm link rally between gold and Bitcoin right now. They're both moving in sync. So perhaps there's a little bit of a movement just away from the dollar and into things like Bitcoin and gold collectively at the same time. Very, very interesting what we see there. If you ask me, if you had to stick all of your money and hold it in there for the rest of your life in the dollar or in Bitcoin, even though I'm not a huge crypto bull, I'd still pick Bitcoin over the dollar, because with the dollar, you are certain to lose all of your purchasing power over many years. So something to think about. Is there a bit of a sound money rally going on where we're seeing gold, silver, Bitcoin, etc. do very well? I don't know. Something to think about. Maybe it's not just about the halving. Maybe it's not just about risk on. And just to update you guys, while I don't have a trade open anymore on Bitcoin, I do have a good bit of, well, it's become a good bit of Bitcoin sitting in a wallet. And only because the price has gone parabolic has it become a decent size. I'm thinking about trimming a little bit of it personally, but it's not a trade, so I won't cover it too extensively on the channel. And here's a quick look at the dollar index. We're looking at a daily chart, and you can see that what was kind of support here for the dollar has given way to now becoming resistance. I'm curious to see how this level plays out here today as we are kind of intraday retesting this 103 mark. We'll see if that gives way to a bigger drop in the dollar going forward, or if perhaps we'll see a short-term bounce. But right now, for me, with the dollar, it's lost its steam. What was this kind of, you know, pretty strong uptrend has given way with jobs data showing weakness to potentially forming a downtrend. But tomorrow will be the big day here, as tomorrow we get the consumer price index. That's going to show us what inflation is looking like in the US. And if inflation is cooling, it could act to really shoot the dollar down. And if inflation is hot tomorrow, it could give a little bit of strength to this, and perhaps we go back and retest that 103.5. We'll be very interested to see what happens there, especially with cooling jobs data and inflation in question. It's going to be a very important report tomorrow morning. We will be live streaming the event. If you'd like to join us, make sure to hit that notification bell on the channel so that you get notified when we go live. Bond yields have been falling here recently, which is probably what is to thank for the recent dollar weakness, as the economic reads have been a little weak out of the US. Yields are coming down and tugging the dollar down with it. Of course, if you're newer to fundamentals, yields are referring to the yield offered by government bonds. And when those rise or fall, it heavily impacts the dollar, as of course people demand dollars when they want to buy bonds, and people, you know, etc., etc. Let's have a look at what the institutional money is demanding out there by taking a look at the commitment of traders data here, which we've got the latest filing from last week. Let's have a look at this. Of course, in terms of net positioning, this is a better indicator for long-term positioning in terms of what institutional money is doing. You can see that they're still very parked in oil and gold, as well as now the pound creeping up there, the Dow and the Nikkei. At the same time, we see the more bearish longer-term holdings are things like the Japanese yen, the bond market, the Australian dollar, the Swiss franc, and the SPX. Now we can have a look at the latest weekly filing. So this is more of the traders section, because again, this gives us information that is latest, like their most impulsive recent buys and sells. And what we can see here is that we've gone ahead and the software ranks it by biggest kind of bullish movements and biggest bearish movements. It's a tongue twister there. The number of long contracts here in terms of, this will show you how many long contracts versus short contracts they currently hold. But this column here will show you the latest change in long and short contracts. And of course, we've summed it all up for you to keep it really simple in the net percentage change. So this tool, of course, is currently on sale. I should mention we're doing a 25% off sale. If you'd like to get access to the commitment of traders data and all of our other amazing features within the Edge Finder, it's 25% off. That sale is ending. Get your software before CPI. That's when the sale will end. And again, use it to help you find better trades. That's the whole purpose of the software. So here's silver. What you can see, they had a net increase there. Gold, same thing with oil and the pound, and even the dollar and the yen getting a little bit of bid from institutional money on a week-to-week basis. The biggest sells here for the week were the NASDAQ, the Swiss franc, the Kiwi, Platinum, CAD, and even the Dow. So something to keep an eye on. And here's the top setups page, which shows us what the Edge Finder scoring algorithm is giving in terms of bullish or bearish readings. What I'll do here is I'll remove the neutral readings. We actually only have bullish readings. We don't have any bearish readings currently on the Edge Finder. We get bullish reads for things like Euro Dollar, Pound CAD, Euro CAD, the Nikkei, Gold, which has been a continued setup for me based on the Edge Finder's output, Euro Kiwi, Pound Dollar, Pound Aussie. A lot of bullishness on pound pairs. The Euro Dollar being in there is interesting. And at the same time, we continue to see a bullish read for gold, which is something that I've been trading, obviously, as we talked about earlier in the video. We saw a recent change in the wind when it comes to Japan. We saw the Japanese stock market actually tumble, and the yen got stronger as there was kind of this change in pace here from the Bank of Japan. Yen firms as end to ultra dovish BOJ, Bank of Japan, appears nigh. So very interesting, a bit of change in policy or at least expected policy going forward from the Bank of Japan. And we can see that in terms of the Nikkei, which is the Japanese stock market, it slid real quick while the yen firmed against the dollar and remained close to a 1-month high last week. Now, of course, talking about the yen strength high, if you take a look at the dollar against the Japanese yen, you can see that recently it's been selling off here. And in my view, this actually looks like it could be set to continue. We had this upward trajectory, price really fell out of bed here, and with perhaps some change in pace from the Bank of Japan, the yen could actually look strong. Of course, being very dovish means that they're super accommodating to try and stimulate the economy, but if they're changing that, then the yen is suddenly going to become stronger as they're going to be less willing to print their currency, etc. And again, this break of this simple trend line on the daily chart is something very interesting. I do think that in terms of support, where you could find maybe a bounce for the yen is this 146, 147 range. But again, in terms of if you're really going to see a fundamental shift, we very well could see a push on the yen down through this level. I would say if you're a bear on the dollar yen, to watch out for that potentially to happen. If you get a breakout here, again, from a daily chart, we could see not a straight shot down, but we very well could see a continued push here from this 146, 146.5 region on the dollar yen. So if you're a yen trader, a currency trader, keep an eye on this one. And here's a quick look at the Nikkei. This is the Japanese stock market. You can see same sort of concept. What was this, rigorous, powerful uptrend is now starting to unfold a little bit here. And if this does actually close red, that's going to give you that kind of textbook candlestick pattern, the three red soldiers, right? So we'll see how that one plays out. But again, a bit of a pullback coming in for the Nikkei, and probably overdue for one. It's been shooting straight up for some time now. But of course, a little bit of sympathy moving here in terms of the US stock market, which is down on the day and on Friday. We'll see if this one keeps pulling back. I've mentioned here recently several times that I would like to see personally a pullback of something around 5% on the S&P 500, which could get us down to like 49.30, somewhere in that region. It doesn't have to pull back, but it's something that I'd be personally looking for an opportunity to get long myself. But right now where it's at, I think we've been a little bit overdue for a correction, and I'm waiting for it myself. Same thing with the NASDAQ. When we pulled this one up, this one actually could even have a little bit steeper of a pullback just due to its higher volatility than the S&P. But so far here today, again, watch this candle close. It's looking like it might be closing with some strength here around that 18,000 level. But again, for me personally, waiting for a deeper pullback and edge finder confirmation before I get long, as right now we don't have any reads from the edge finder's top setups. So I'll stay out of the way based on my own strategy. And just a reminder, as we go into the US CPI number tomorrow, it's all about jobs and it's all about inflation at the same time. They both matter. Well, just a reminder that, again, what was a really strong jobs number that was reported last week got revised lower. And so we've seen a little cooling in the job market. So when it comes to jobs, what you have to remember is that if jobs are cooling and inflation, right, let's just say CPI. So if we're taking inflation, if inflation stays sticky or even, stubbornly higher, those scenarios can create a little fear in the market, because what that's going to tell you is that the Fed is going to want to cut rates, but they can't necessarily get both of these jobs done, right? They want inflation to come down and they want jobs to come, they don't want jobs to slide too far. So this is definitely setting up for an interesting week, because again, if you get inflation stubborn but jobs coming down, this would tell me personally to very much stay long gold in that scenario. So it's something I'm watching for. Now, in terms of what we get tomorrow, let's say we don't get that. Let's say that tomorrow we get inflation coming down here. That actually could still be a scenario to be very bullish gold, because again, cooling inflation means interest rate cuts are probably coming sooner. That's what the market will be looking for tomorrow, is in terms of the stock market. They want to see CPI come down, and we'll watch that one close to see if that does in fact happen. But again, remember, it's all about jobs and inflation at the same time. They both very much matter to the market and more importantly to the Fed. Here's a quick look again at retail positioning. We can see markets that are, of course, getting more contrarian signals, both bullish and bearish. based on what retail traders are buying or selling. So the Edge Finder, what it does is it says, if a reading is really strongly polarized one way or the other, give us a contrarian signal, as we want to be careful not to be in the same trade that retail traders are piling into. So this is also incorporated into the Top Setups algorithm. And I just want to remind you, as we sort of finish out, the 25% off sale is ending. If you've been thinking about getting a copy, take advantage of that. Send us a direct message using the very first link in the description. You'll be connected to someone on my staff who can answer any questions and get you hooked up with that huge discount before it ends. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.